Hey! Hi guys, and welcome to Macro Markets. This is Marcel Pechman, analyst and writer at Cointelegraph. Today is Friday, March 31st, and we'll be discussing the impact of macroeconomic news and events on the crypto space. Don't worry, I'll explain everything in plain English, no jargons, no technical terms, and focus on the cause and consequence on the day-to-day crypto trading activity. For today's show, we'll start by discussing the housing crisis. First of all, what happened to home price in the US? Well, the Case-Shiller index dropped by 0.5% in January 2023 versus December 2022. It was the 7th straight month of home price declines. Of course, that's the national average, so some regions perform worse than others. For instance, San Francisco home price went down by 7.6% year over year, and Seattle declined by 5.1%. Sure, one can blame mortgage finance costs and layoffs in big techs as the Federal Reserve has been raising interest rates. For instance, the 15-year fixed mortgage finance currently costs 5.6% per year, up from 3.7% in March 2022, a year ago. So it seems small, a 2% increase, but the payment over 15 years, it's like $100,000 for a $300,000 condo. It's like a 25% cost if you aggregate the 2%, if you compound it over 15 years. Another huge issue on the housing market lays on commercial properties, which is more directly impacted by the recession. While families must find somewhere to live, business will shut down immediately non-profitable operations, and corporate layoffs might trigger a cascading effect on this market. If there are less companies competing for space, odds are the property owners will have a hard time when trying to keep up inflation, meaning they won't be able to increase prices. Or if the person who was renting the space is out, he's going to have a hard time replacing it with a similar fee. So most likely delinquency rates are going up because of the recession. So unpaid terms, so the renter will be evicted, and that's not a good thing, which is also going to negatively impact the sector. In 2023 alone, $488 billion in commercial real estate loans are maturing. Refinancing will be costlier as the interest rates have gone up. This will certainly cause havoc and some panic selling among commercial property owners. This is not a speculation from Marcel. This is happening. Columbia Property Trust defaulted on $1.7 billion debt in February. They manage 7 buildings across different cities. Moreover, 2 office towers in Los Angeles, controlled by Brookfield Asset Manager, which is one of the biggest real estate managers in the world, also defaulted on their debt. So it's not speculation, it is already happening. More importantly, the banks, especially the regional ones, own a huge chunk of this debt. That is precisely why, even if there's no housing crisis, a liquidity crisis can be devastating, as commercial properties will be unable to refinance their debt, as the cost for the refinancing will be higher than what they get in return from renting the place. So they will shut down. No commercial operation will continue if it's not profitable. So if they're not able to refine at the cost that is interesting for them, they will simply shut down and default on the loan. And that's why it's so bad for regional banks, and that's why a liquidity crisis in the commercial housing market can aggravate the banking crisis. Okay, so quick recap here. Why should crypto investors care about the real estate markets? Well, first of all, it's a $330 billion market. $330 billion market. And indirectly, it competes with Bitcoin as a store of value. Well, it shouldn't be that way. People shouldn't be buying commercial properties and especially residential houses, homes, as an investment. It became like that because we don't have hard money. So people look for alternatives such as stocks, such as housing, to invest their money in to get some yield. Because if you don't get yield, inflation will corrode, will make your money with less value over the years. So people had to park their money somewhere else. It's because of lack of hard money. However, the residential, the homes, seems like a safer market versus the commercial properties, because ultimately families need somewhere to live. So when those companies are renting out property, they can downsize, they can shut down operations, they can move to another city. It's much more flexible than a family. And commercial face serious risks of downsize, especially during periods of corporate layoffs. Number two, even if prices drop by 10-15% per year, the banks won't be happy to repossess those properties. They're not going to be able to sell it if the market is in a recession. And the commercial properties will be unlikely able to up their rents to accommodate the higher financing costs. On to the next topic. This time we'll discuss the France-China liquid natural gas LNG trade no longer being based on US dollar. Is it the end of an era? So let's jump to the news. CNOOC completes first yuan settled LNG trade. China National Offshore Oil Corporation and France Total Energies have completed China's first yuan settled liquefied natural gas trade through the Shanghai Petroleum and Natural Gas Exchange. The exchange announced Tuesday. Okay, so what happened here? Well, first of all, the Total Energies is a company, an energy company in France, while the CNOOC, it's like the Chinese, one of the Chinese oil and gas producers. So they somehow settled a trade directly in yuans. But you gotta remember one thing, the banks in France, the companies in France, as far as I know, are not allowed to have yuans, the Chinese currency, renminbis, in their local bank account. So somehow it gives me an impression that this trade was manually settled with help from the central banks, because that money is not flowing directly between those two companies. I don't see how that would operate unless the French company held a bank account on a Chinese bank, which I don't think would fit, which I don't think would be right for the French owners, being so dependent on the Chinese banking system. So what I think is that the trade is manually settled. It's not something that can escalate. It's not something that can be replicated to other sectors, and it's gonna need a lot of trust between the parties or a direct involvement from the central banks. What you've got to question yourself is, why is the US dollar the global currency? First of all, a lot of people say, well, 60% of the foreign reserves are in US dollars. Well, that's not true. 60% of the global reserves from IMF and the countries itself are sitting in gold, okay? So when people say that 60% of the reserve are sitting in US dollar, they're talking about fiat currencies only, because gold is a much bigger market for international settlement and for savings from countries and from global institutions such as IMF. Second, the standard wire methodology to send and receive money abroad is the SWIFT. There's no other competing system which integrates so many banks, so many countries. Yes, it's something that still uses technology from 40 years ago. A SWIFT trade can take at least one business day to complete. It's a messaging system. It doesn't really handle the transaction of the money. And there has been huge frauds using the SWIFT system in the past. It's not fail-safe, but it's what they got. And the SWIFT system is settled in US dollar. They're trying to expand it to other currencies, but right now the default thing is US dollar. More importantly, when you go to some London Metals Exchange or the NYMX or whatever market that you're gonna trade commodities, the bigger volumes are in US dollars. So even if there's a exchange in China that's trading oil or liquefied gas, their pricing will be based on the US dollar exchanges because that's where the volume is going through. The same thing happens to cryptocurrencies. Bitcoin is quoted in US dollars. Yes, you can buy it in local currency in Brazil, in South Korea, in South Africa, but there's no really independent trading over there. They just calculate what is the fair value for the dollar in the local currency, and then the market makers will make sure the price goes pretty much in line. Of course, if there's some cost to do the FX, to change the currencies, the local price will be a little bit higher. But big picture, they will tend to follow where the volume is, which is the US dollar. So the bottom line here is, until you create some infrastructure that allows freely companies to exchange yuans for the local currency, and for this French company to store yuans in their balance sheet or in their local bank account, I doubt that this will be anything big. Right now, it seems something done manually, just a display of force. It's not something that can escalate to various sectors, to various companies, to individuals. And most importantly, the prices of commodities are still traded based on US dollar prices, because that's where the volume is happening, in London markets and in New York or Chicago markets. So they're priced in US dollars. So the bottom line is, I don't think that the US dollar is being treated as the major exchange for international trades, because the commodities are still priced in US dollar and there's no infrastructure allowing anything for global trades other than the US dollar, maybe the euro, but certainly not the yuan, certainly not the Russian ruble. If you are wondering, well, could cryptocurrencies fix this problem? Would it serve as a global settlement layer or currency? Yeah, for sure, it would serve. But for that to happen, you cannot force adoption. So until the companies and banks and clients elsewhere start saving, having bank accounts in Bitcoins or Ethereums or whatever, and it becomes acceptable for those companies to use that into financing loans, into margin trades, instead of just being an asset like a work of art or a building that's just sitting on a balance sheet, until it's more integrated with the traditional market, I don't think that's going to happen. And even if some country starts using cryptocurrencies as a settlement for commodities trade, it doesn't mean that the global adoption will accelerate because of that. One way to facilitate the integration of cryptocurrencies with traditional markets is the spot-based ETF, which you currently don't have in the United States. When you have the spot-based ETF, the holder, whether it's a bank or it's a corporate, can get those shares that represent a Bitcoin and use it for collateral, for margin, for getting loans in a bank. Because right now, there's only a derivatives contract backing the ETF in the United States. Remember that the spot-based ETF is already trading in some places of Europe, it's trading in Canada, it's trading in Brazil, so it's a matter of time. So I think adoption of Bitcoin and cryptocurrencies as a settlement layer for international transactions will happen gradually. It's not something that can be forced. It's not something that El Salvador or any country can enforce companies to start using it. Even if within El Salvador, the adoption of Bitcoin transactions is really small. Most of the users opt for the dollar, for the stablecoin. So it's not something that can be forced. Well guys, that's it for today. Remember to like and subscribe the new Cointelegraph Markets and Research YouTube channel. We'll be airing every Friday, 12 o'clock p.m. Eastern Time. See you!